Hello, I'm Jerry. Welcome to Interesting Colors. This webcast is all about the market phases posture. Back in July of 2022, I did a webcast regarding the market phases. And the market phases is a concept that James Boyd came up with many years ago. And it involves using the 30-day simple moving average, the 10-day exponential moving average, and the 10-day Hull. And it turns out, depending on where the stock price closes in relationship to those moving averages, you can determine there's one of five phases. And in that video in July of 22, I went through each and every phase, and in fact, in the write-up underneath the webcast, there's a description of the definition of each phase. So I'm not going to go through that today. I'm going to try and relate what's going on the chart with regard to the posture. Of late, I've been experimenting with the concept of the market phases posture, and I've gotten it down to two colors, red dots and white dots. And the red dots correspond to phases 1 and phase 5. And I'm going to show you how they look on the chart. Those are red dots. And white dots correspond to phases 2 and 3. And if it falls into phase 4, right here, where it's phase 4, there's no dots at all. And basically phase 4 kind of sort of means we don't know what's going on. So the way the posture works, in fact, let's look at this series of red dots right here. Right here, we'll zoom in on those. The posture works, basically it says if you're in phase 5, if you're a red dot, if you're in phase 5 or phase 1. And phase 5 means that the stock price is closed below the 10-day exponential moving average, but is still above the 30-day simple moving average. So here, these are all in phase 5. When the stock price closes below the 10-day simple moving average, it is going to be phase 1. There'll be phase 1 in here, phase 1. It's going to stay all phase 1 until it reaches some point where the stock price can close above the 10-day exponential moving average. And when that happens, it's going to be a white dot. And eventually the stock price will close above the 30-day simple moving average. When that happens, it's going to be in phase 3. So anything that's a white dot is by definition phase 2 or phase 3. So in this particular case, what you're looking for is these transition points. You're looking for where it goes from a red dot to a white dot, or a white dot to a red dot. And hopefully you're in the right spot to where you can spot those transitions. If you're in a trend, and you happen to jump on the trend here, let's say at this point, it's a white dot, and you follow the trend, and you should somehow hit a spot in here where the chart goes into phase 4. The trick is to not bail out. You don't want to get out at phase 4. You don't want to enter, but you don't want to exit either. So here's a case of where we were in phase 3. We fell into phase 4, and that's where the stock basically is still above, the stock price is still above the 10-day exponential, but the 10-day hull is falling. The slope of 10-day hull is negative at that point. So for this little band in here, for this one here and this one here, we missed 2 bars where they were in phase 4. We did not get out. Strong trend. The price bounced off the 10-day EMA and kept on going. If it closed below the 10-day EMA, that would have been in phase 5. If it closed there, we would have got out, but it never did. So that's the essence of the posture. You're just looking at spots, trying to figure out how to jump in and use it. One of the things that can make this easier to visualize is this graph on the bottom of the chart, which basically shows when we're in a buying situation. There's the white dots, and when we're in a selling situation. So purely binary, buy and sell, and we can see that for Dollar Tree for the last year, we were in a buying situation for 16 periods. Not a whole lot. Obviously, if we were in a selling situation, we didn't want to be invested in the stock, but if we were in a buying situation, we wanted to be in there. So the dots that are sitting here are the red dots and white dots are plotted on the 100-day simple moving average line, and the slope of the line does not mean anything. The only thing that matters is the color of the dots and kind of sort of where they're at. And you know, if you this is these instructions here, the chart on the bottom basically is, you know, what I was using to determine buy and sell signals. So one of the things that I did was I took and rolled this concept into the strategies that Toss Strategies has, and I did this to try and compare and find the best strategies I could find. And it turns out that the market phases posture is pretty darn good. You can see down here, this line here, this graph represents the profit and loss of the stock over the last year. And during that last year, I was using $5,000. And every time we got one of these buying opportunities right here, the software goes out and buys $5,000 worth of shares. In this case, for this buy, we bought 33 shares, and then we sold it right there. And we made a little bit of money right there. And when we had this big drawdown, we were out. We were not riding in. And at the end of the year, doing that, 5K buys in and out, in and out, in and out, the chart says we were up $2,700. So if you go and look through these, and I'm just going to do some of these. We're in NASDAQ. Let's sort here. Let's see what we've got. So there's the same logic. And if you look at it, you can see that, hey, this thing, oops. And if you look at it, you can see it's not perfect. There are spots where sometimes we go into the red. Here's one in, oops, where's that at? Let's see. Sometimes we go into the red. So for Marvel, the beginning of the year was not a good time. We got in and out, and you see this situation down here where we were getting whipsawed in and out of the stock. You can see it's kind of flat, and we didn't have really a good trend. So if you just blindly say white dot, red dot, white dot, red dot, this is the kind of results that you might get. You got to add some, you have to add a little bit of logic to it, but for all intents and purposes, this is about as close as you can get to when do I buy and when do I sell. And I've compared this strategy against a number of strategies, and it seems to always want to come up on top. So, and you can see we're sitting here, all these things, and this was 5,000 for each trade, 19 trades over 52 weeks. And obviously the best time to be in was, whenever you had a little bit of a run. So we were pretty much guaranteed to jump in here and sell there. And this concept, seemed to work pretty well. So I've added at the top of the intro for this webcast, I've added the code for this line right here for the posture. And if you want to put that on your chart, that's good. The thing that I use is I've got the market phases on my watch list, and I can go down the watch list, and those areas that are in black represent key areas where I'm in a transition phase. So if I see a black line or a black background for a particular phase, I can look at that. Let's go back here so I can show you this. Go ahead. And here we are with a white dot right here, and this means for Adobe we are in phase 2. This potentially could be a good start for where you could enter it. If we look, however, one of the drawbacks at this point is that the 30-day simple moving average is going down. It's red, but it could change. If that price can somehow make it above this, it's going to take off. If it falls back below it, be prepared to jump out. I don't happen to, here's a P3. Let's see what's happening with this guy. Again, this happened today, so there's a buy signal right there saying, according to your logic, you should jump into it. Just for grin, let's look at that to see what we've got for, we would have made 2K, but we didn't do much, for when it was dancing around here. So in any case, that's pretty much the rationale behind the market phases posture.